Here's how actress Michelle Williams won the World Cup of Futures Trading Award at age 17 by Christine Jenkins. Michelle grew up watching her father, commodities trader Larry Williams, beat markets and become a prominent investor. He created the Williams %R market indicator and has published 9 books on investing. And in 1997, after she'd had a few small TV appearances, Michelle entered and won a futures trading competition, 10 years after her father won the same competition. In fact, she didn't just win the competition, she blew it away. No one has beat her returns at 1,000% since she won the competition. Michelle's father was a commodities trader before she even knew what that was. Michelle was just 2 years old when her father forecast a huge bull market in 1982's How to Prosper in the Coming Good Years. He had already published How I Made $1 Million last year trading commodities. At age 7, she watched her father win the World Cup of Futures Trading. Larry's 1987 win in the World Cup Championship of Futures Trading from the Robbins Trading Company, with an 11,376% return for taking $10,000 to over $1 million, is still the top performance in the competition. A couple years later, her father homeschooled Michelle to trade, and she took to it like a duck to water. Larry told Traders magazine that he homeschooled his daughter and taught her how to trade by showing her the markets and talking about influences on the bond market. She took to trading like a duck to water, he said. At age 9, Williams told her parents she wanted to act instead. Michelle had already appeared on episodes of Baywatch, Step by Step, and Home Improvement by the time she was 15. That year, she got legal emancipation from her parents. But that didn't stop her from entering and winning the Robbins World Cup of Futures Trading. The actress didn't abandon her father's investment footsteps entirely. Years into her acting career, in 1997, she won the Robbins World Cup Championship of Futures Trading, turning $10,000 into more than $100,000. She won the competition when she was 17 and went right back to acting. Michelle was on Dawson's Creek from 1998 to 2003, leaving her trading days behind. In 2005, she was in an entirely different competition as an Oscar nominee for Brokeback Mountain. Now that Michelle has a daughter, will she teach her how to trade? In 2005, she had a daughter with Brokeback Mountain Costa Heath Ledger.
I first began watching the markets in 1962 and by 1966 was actively trading. I initially started because it looked like it might be easy money, and it is when you are right. When you lose, though, it is not so easy. I was in college getting a degree in journalism when the markets first caught my eye. I started out, however, as an art major. I've always thought that my early art training has helped me in my trading. At an early age, I was shown how to really look at things, such as texture, hues and colors in blades of grass. That type of study was just great for looking at charts. Moving averages and trendlines were the main focus. Chief among them was Richard Donchian's work. He later became a friend of mine. Also, Dunn and Harjett's work was popular. There was also a lot of writing about time cycles and chart formations, such as William Dunnigan's thrust method. Joe Granville, another author who became a friend, had the most comprehensive book of that era. But no one had done any serious backtesting, as we do now. The work was all based on general observation and memory. No. At first, I lost about half of my capital, and that scared me to death. So, I stopped reading books and began studying on my own to learn as much as I could. And, I'm still studying and researching. My initial problem stemmed from a book that assured me if I followed the program in the book, I would make money. But, I guess the markets had not read that book, as it didn't turn out that way. That was both a good and bad experience. Bad because I lost money, but in doing so it greatly motivated me to find out how to beat the markets and get my money back, plus some more. It took about 3 years to achieve success in trading, and I'd say years before I got really good at it. Even then, there were still lessons to learn, such as money management, trade size, and new and better entry techniques. It was not until I mastered these aspects, including money management and position size, that I began making millions. There have been so many that it is impossible to narrow it down to just one. I guess winning the Robbins World Cup Championship is the most memorable, and it has set the tone for much of my life, taking $10,000 to $1,100,000 in real-time trading. I will never forget challenging Hans Nice to trade against me in a contest and having him back out. I did not expect that. He claimed to be the late Norbert Fischer in Frankfurt to resolve the issue. Hans turned down the idea. It's too bad, it would have been a great show of my abilities and exposed his so-called trading system. All things considered, though, my most memorable experiences include seeing people being able to walk away from their jobs, from bosses they did not like, and make a career in trading. Being able to help people become wealthy and independent, that is the most striking thing of my career. This one is easy to answer. Cut losses short. Profits never hurt you, it's the losses that are so critical, and traders must learn to control them. Trading is a business of damage control. If you can't master that, you will be damaged. I can teach anyone, but not everyone can do it. A great chef can teach anyone to make a soufflé. But, not all cooks can make one. Some people are just too emotional, some can't stay focused, and some are just dumb, at least dumb about the markets, and I cannot overcome that. I began trading stocks many years ago. In 1996, I developed a mechanical system for investing, which has turned out good performance. I really wanted to share this information in order to reveal my research and demonstrate that a successful investment method based on fundamentals was possible. This is something the average guy or gal can do with ease and still outperform most mutual funds. Once I identify the appropriate fundamental setup, then I can turn to technical action including patterns, trends and other factors to pinpoint an entry. I need a known quantifiable condition to exist in order to draw me into a trade. Markets do move on fundamental factors, and the charts and other technical indicators simply reveal that the move is underway. One example would be if the 18-day moving average for bonds were greater than 2 days ago. That tells me that interest rates have fallen and I might buy a gap down open in the S&P or DAX. My very favorite is the Zurich Axioms by Max Gunther. I've read most of the books ever written about the markets. I believe his is best in terms of being a speculator. Each page is filled with wisdom and is extremely well written. It does not talk about how to make money, but instead the art of making money. I like the book so much I am actually trying to buy the copyright. All of my books, of course, just kidding. Anything by Tom Demark. He's been a dear personal friend for many years. The darlings of the Dow are the 5 lowest price best fundamental stocks in the Dow 30. Once I find these, then it is just a question of buying them at the right time. The idea came from looking at the dogs of the Dow. It was a good idea but lacked timing and I think used an inferior method of selection. It only relied on yield and there are better measures of value. I look at several ratios, as mentioned in my book. These include ROI, PE, sales to employee, declining inventories and the like. Great question. Yes. Everything always matters. If conditions change I have to as well. A speculator has no business living in the past or he will have no business. I follow the commercial traders. They are the superpowers or those that use and produce commodities. I really like to be a buyer when they are buying. These guys have the money and the inside information, so I track their every move. I also like to know if a market is over or undervalued. I have a formula that tells me if the currencies, or corn, cattle or cocoa or copper or gold are below or above real value, not the cost of production. It is very helpful in finding markets that are about to have major up and down moves. I also look at specific price patterns and trend change tools for actual entry points. Do you have 4 hours to learn it? It is not just the formula, it's like owning a hammer. Just because you have a hammer does not mean you can build a house. Suffice it to say I take the net commercial position and then see what percent of this week's reading is of the buying and selling of the last X number of years. In short, that's my percent R applied to the data. Yes, I am 100% mechanical, and that's what I teach as well. As a day trader, yes, the computer will flash a buy or sell, so then all I do is enter the orders. There is no need to stare at a chart and guess what to do. Oh, absolutely, even as a short-term day trader I have made fundamentals as part of my system. Where does discretion does come in? It does not at all. I said that. I must have been very young. We can't really see the future. We can only guess about it, but that is based on the supporting conditions, the fundamentals. Charts show where the market has been. I have to know where it is going. Conditions move the markets, not charts, so I can and do use charts, but not like anyone else. They are the last things I look at, not the first. I look at several fundamental factors including the price of gold, where interest rates are, and what the commercial players are doing. It begins with always using a stop-loss order. Mine represents a percentage risk of the money I have in my account. Like I said, it's about damage control. There's more though, I never ever plunge in. Been there, done that. My positions in the market are based on a formula of equal units of risk. This is an easy answer. I let the markets show me when it moves against my position by a predetermined amount. Since I am protecting my capital, I use that as a starting point to determine what level of risk I can afford. If I lose that amount, the market has told me to get out. It's nice of the market to do that for me. I use a dollar stop so I can protect my capital. I am a short-term trader. So, my average trades tend to last for 2 to 3 days. At times, I will put on setup trades, which last anywhere from 5 to 60 days. That is the time frame that most people, who have other jobs and don't have the time to follow every move of the market, should look to. I hunt for these trades, like a hunter looking for deer. Personally, my average trades are 2 to 3 days. But, for people who like to take longer-term trades, I teach how to hold for bigger moves. It's all mechanical. I use both. You don't always hit the target, so trailing stops are critical. Of equal importance is to know when to kick in your trailing stop. Start using one too early and you are just setting yourself up to be stopped out. I don't let that happen. The market will tell us when to shift gears from a loose stop to a tight one. That's done when price starts to break out and becomes profitable. Then it is time to ratchet up your stop. Now, it is about 5%. When I was younger it was much higher. With age comes wisdom. Even that is a high risk factor, but I have traded all the way up to 30%, it causes wild times. I use Genesis software to test, create, and then run my ideas. The software is a delight. I have no programming skills, but still can find out what happens to the DAX before and after holidays, what it does when interest rates jump up, or just about anything you can think of, all with no computer skills. First, you need to come up with the idea. That could come from talking to someone, reading a book or such, but it usually comes from looking at the markets. I look at them a lot. Great Saturday night fun.
I'm a big believer that we can know the future of stock and commodity prices, but how? With cycles. We were able to call the exact low of the 2015 sell-off a year in advance using cycles. So I'd like to talk to you a little bit about cycles and give you a great one. About every 4 years, we've seen substantial lows in stock price activity. 1962, add 4 years, you get 1966, another low. Add 4 years to 66, 1970, another low. If you just go in that 4-year cadence, you'll be amazed. If you study it, look at your charts, go, wow. About every 4 years from the last significant low in the marketplace, another low and great big up move starts in the stock market. So there are cycles that do work on the marketplace. There's so many of them. Can get very intricate. For the longer term cycles, look at the 4-year cycle or something also called the decennial pattern. Put cycles in your trading quiver and you're going to get a lot more arrows in the bullseye. How do you know if the trend of your stock or commodity is up or down or sideways? There is a mathematical way of telling it. I'd like to share that with you today. There's so many ways of looking at trend, but the simple one I developed years ago, and you can put it on all of the software you have, is simply a 50-day moving average. If price is above a 50-day moving average, or that 50-day moving average is an uptrend, assume that the trend is up. If it's in a downtrend, then assume the trend is down. In a downtrend, that means you would want to be taking short-term sell signals. In an uptrend, you can take all the buy signals because then you will be trading and you'll be investing with the trend. The trend is your friend. Stay with it, use a 50-day moving average, and you'll know the real trend of the market. I'm always asked when I'm out at social engagements, cocktail parties, Larry, when's the best time to buy stocks? And I'll tell you, it's really hard to buy stocks at the best time because the best time to buy stocks is when the news is horrible. Every stock market bottom where I've been a buyer has always occurred with very negative news, whether it's the SARS swine flu vaccine, interest rates, Federal Reserve, whatever it is. The worse the news is, the better the buying opportunity is. And that's hard for us to overcome because it looks negative. But in my world, an upside down world, bad is good. The best time to buy stocks? When the news is really bad. Do you have the right stuff to become a trader or an investor? Frankly, I doubt it. A dear friend of mine, Jim Irwin, was the first astronaut to drive a car on the moon. I asked Jim how he got selected to become an astronaut. What process did they go through? He said the big tests were on how much stress we could handle. And to learn to handle stress, they had to repeat the same function over and over. Things would change. They'd have to learn to respond to it. That's what traders do and investors do We're always responding to something that we don't have a lot of control over, just like the astronauts. So if you don't handle stress well, if you get emotional, you respond too quickly, this is not for you. Pack up your computer, stop trading, you're going to lose money. I don't want that to happen to you. Or learn to handle stress, to stop, to think before you react. Most people that are not making money react too quickly. Instead of cooling off a little bit, thinking about it, they jump to conclusions. This is not a business where you want to jump to conclusions.
I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. Like Friday she's a whore, I love it. I know she like it for real, I'm a fire like Aladdin. On a pussy cold, I'm piercing why she did it, cause she lied. What we do here is always great. If you ask me, I know nothing. She just jumping on my dick. I know she like it cause she lied. You're such a fucking hoe, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. Like Friday she's a whore, I love it. I know she like it for real, I'm a fire like Aladdin. On a pussy cold, I'm piercing why she did it, cause she lied. What we do here is always great. If you ask me, I know nothing. She just jumping on my dick. I know she like it cause she lied. You're such a fucking hoe, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. Like Friday she's a whore, I love it. I know she like it for real, I'm a fire like Aladdin. On a pussy cold, I'm piercing why she did it, cause she lied. What we do here is always great. If you ask me, I know nothing. She just jumping on my dick. I know she like it cause she lied. You're such a fucking hoe, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more, I love it. Like Friday she's a whore, I love it. I know she like it for real, I'm a fire like Aladdin. On a pussy cold, I'm piercing why she did it, cause she lied. What we do here is always great. If you ask me, I know nothing. She just jumping on my dick. I know she like it cause she lied. You're such a fucking hoe, I love it. I know you like it more, I love it. I fuck her when I'm bored, like Friday she's a whore. I know you like it more.
Say a little prayer for right. You know that if we are to stay